Hey, good morning. All the excitement's over. All the craziness for now. Typically, now we get a calm day. Wide range bar day followed by calm day. I hope it's not. I hope it collapses maybe by the end of the week to get down near these lows, maybe below it. We'll see. So a little stabilization here. There's the, what time is that? Actually, I don't have the time on there. In a second. A cursor. Always visible. Cursor label is always visible. There we go. Let's do that. Okay. So that was the peak at 3. You know what happened. Went up, collapsed, and now it's just hanging down here. So, factory work. The assumption is it ain't going back up to yesterday's high. But that's the void, since it collapsed like that. As we're looking at the futures here, it's not going back up there. Factory work says that's our first line of overhead resistance. As you know, though, we kind of take an eyeball of the halfway mark in between and see wherever that is, give or take. Let's see, that kind of lines up with that minor resistance. In reality, there is no resistance there unless it can line up with something inside of here, and I imagine there's nothing there since it collapsed down like that. But we can scroll this over. I'm trying to see that line up. That's where it whipsawed. Right, the initial down, up, back down again. So it was just a collapse at that point, straight down into the end of the day, and then overnight you see what it's done there, just flip-flopping back and forth. So that put it like there, give or take 38.50. Right, 38.50 on the futures is about the halfway mark that lines up with that area there. And so while there's nothing there, the other part of the factory work is it's got to create resistance since there's nothing there. And kind of what it's doing here, it spiked up, deep retracement down, it's just flip-flopping back and forth. And I can't imagine anybody wants to be a buyer here other than scalps until it gets somewhere down here. And that's, the common sense part of just looking to the left. For whatever reason, something was to motivate buyers to rally it back up there. We'll see if that should happen. Right now, the assumption is it's coming down here. I'm hoping down below to this area of 38.50. I doubt it's today. Maybe it's next week. I don't know. But once it gets down there, I think you'll see some aggressive buying because that's where the lows are. Look at the weekly chart, big reversal down there. And, way back here, I mentioned, hey, this looks like it should go up, but if it doesn't, it's a measured move lower. And that projects it down here, 3,600. That's a ways off. Right now, it's just marking time. And SPX 3750. 3750. Down there. Unless the premiums have moved, I've got written down 3690. But I wanna you want the big juice. Yeah, 90, 95, sure. Below 3,700, absolutely. So you see the bottoming tail bars here, where I've got this little green area. So we want to be below there. Whole number, open interest, multiple lines of defense. We don't want to get run over. All right, so down below there. And last I looked, 3890. 3890, which is up here. So it would have to get through 3850 to even open the door to possibly get up there. And by the time it gets up there, let's say it gets a little further, it starts hitting whatever levels, what's further to the left, who's got fib lines drawn in, who's got trader pivot lines or whatever. It's just like it's to run that many points up there from where it's at seems unlikely. Now, I'm looking at the futures here, but what we're talking about here is SPX, the credit spreads, right? So there's the middle there on SPX. You can see these overlapping opens and closes, 38.30-ish. So we want to see, expectations are that it will stay below 38.30 on a closing basis. Sometimes they pop up there and it forms a topping tail and it comes back down. If it's really weak, it's going to stay in the lower third and it won't even get up into there. So it gives us some guidelines. Even 36.90 has juice. Yeah, that's what I have written down, 36.90. So, down here, down below 3,700, bottoming tail. That gap, call it filled, maybe. I don't know, maybe not. Anyway, it's so tiny, but it went down there. And so, right in here, you got an area of support. And, just looking at, here, this unfilled gap is where it closed. And there's just nothing to stop it from going down there. So whether traders want to continue to be selling aggressively, as this dropped, I mean, we'll see. It closed around 3,800. Maybe it just hang around there. You saw the futures are up here a little bit. They're just hanging in this area here. So nothing bullish. Just still bearish. Just kind of, I guess, institutions holding their breath. Praying to the market gods that they'll be saved. It's unlikely anybody's coming to save longs at this point. So what we'll be looking for is some kind of capitulation move to the downside here. And that's usually how it ends in the short term. And then we'll see what the bounce is from there. So SPY, look at, and you see the nasty wide range bar. Is 38.90 a no-brainer or not a no-brainer? Wow, you're putting me on the spot there. Is it a no-brainer? I would call it, because there's this several factors. Yesterday was a wide range bar. Right? How did the wide range bar start? Well, it started from 3 days of consolidation. It's not as if it was going down and it formed that bar. So it did fuel the tank up a bit by this. And so that went down there. You've got 37.50 as a line of defense, right? Just if we look at open interest, I'm not going to get into that right now, but you can look at that on your own. 3,700 is going to be a big level. So the idea of be below that. Now, when you say no brainer, does that mean that you can put in the spread and walk off and forget about it for the rest of the day? By no means. By no means. So what I really like when I look at these levels in the morning, there's a decision. Do I do it in the first 5 minutes? Is it far away? Right now things are consolidating. But ideally, when I look at something like this and I say, you know what, that's what I believe, it's not going down there today for reasons mentioned, right? Well, if the markets start going down rapidly from the open into 10 o'clock and I can find premium at 36.50, that's a no-brainer, because now it's got to go like 200 points, give or take, to get down there. And so one of the things that we look at is like average range on a day. So, what was yesterday's range? 117 points was, the difference between the high and the low. And so at this point, just the numbers that I mentioned are about 100 points away on either side. Now, again, looking at that, what's the average range, blah, 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 what's, others that were even bigger, is it possible to have a range greater than 100 points today? Well, sure it is. There are times in history where we've had range bars like this 3 in a row, So is that today? I don't know. I don't think so, which is the best I can offer as far as saying a no-brainer. Um, so no-brainers as far as SPX credit spreads. It's not the same as a no-brainer when we look at a pattern as a directional play kind of thing, but I don't think it's going down there. I'm reluctant to say no-brainer, right? But it's close to like saying a no-brainer that it's not going down there, right? Truth McGraw is telling me expect move in options table is 57 points. That's what that means. One usually does not expect 2 times expected move. Right. I think that's a good guideline. So what McGraw is telling me, the expected move, if you look at your options table, however they calculate that, is 57 points. Right. And you usually don't expect 2 times the move. So I didn't say it in that way, but what I'm saying is this bar was 117 points, and the strikes I'm mentioning are 100 points away, which would be right around 2 times the expected move. So we're reaching the same conclusions from different paths, so to speak. Right? However, they're doing it through their calculations, blah blah blah. I'm doing it with just looking at these bars and seeing how the ranges and where they're at. Right. Yeah. So, yeah, me too, McGraw. If I come to a conclusion and I respect, the information that you're looking at, which I've done that over time. So to be fair, I was very resistant, but when I see that we're in the same area, through different methods, that adds to the confidence that we're looking at the right thing. Yeah. So yeah, that's great. Good question. All right. SPY. I always look at that especially for DB duck. Wide range bar. It fueled the tank. Right? Resistance. Drag this down. This thing's gotten more sensitive to touch since they've done some upgrades. All right. So top of the bar. First reference point of resistance. Middle of the bar. Same spot as we looking at that congestion and minor. You can see it's just flip-flopping down here, and I think it's got to go down here, 360. That's the level, 371. There's another pivot down here, and you've got many of these gurus saying this is the low. Well, maybe it is the low. Maybe but it's still got to go down there, in my opinion, with a wide range igniting bar like that after 3 days of consolidation. So whether it breaks the low, which I hope it does, that just scares the living daylights out of everybody. It would line up with a measured move. We could look at the monthly chart and see, what's below that, which, oh man, I'm laughing because, when we got a monthly reversal that fails in something like this, I mean, look, I'm getting ahead of ourselves here, but maybe before this is all over, in the end, it's down here. But we'll see. That doesn't mean it's going straight down there. Just based on this time frame and the weekly time frame, and what this is September 22nd. We're coming into the end of the month, which cycle-wise, middle of the month, end of the month, the beginning of the next month, falling down there into the beginning of October. I would expect some kind of a rally, and then maybe the middle of October we get the washout. So. But that's getting too far ahead of ourselves here. For right now, odds are some kind of stabilization day. Institutions catch their breath. Eventually, a move down here. All right. Other markets. Same story. Big bar. This is already down to these July pivots. So buyers are going to want to put their toe in the water there. But we got the same weekly failed buy setup and looking for the measured move. So eventually coming down there. If you want to look at it on the Qs, and it took out the high. That adds to the nastiness of it. Like it didn't just open there and go down. It took out the high and then went down. And there's the bottoming tail bars. We're looking for it to come down below the lows here and then some kind of tradable bounce. The faster it goes down there, the greater the probable bounce. And Russell, we drag our support now down here. There will be some support. See these overlapping opens and closes? There is some support there. And so if we would zero in on some of these lower time frames, you'll see that there's some kind of a shelf there. I got to go too far back. Anyway, look at it on your own and you'll see what I'm talking about. That's part of the things that we teach in the courses. Why is this support and resistance, these overlapping opens and closes? Because it's a base in a smaller time frame. Right. And we looked at ES, we looked at NQs, YM. Right. Got to go down there. Right? Why would anybody want to step up aggressively before it takes out this low? It's already down at that pivot. Right? You got to take it out. You gotta hear the screams. You gotta see, the sweat coming off of the brow on the guy on CNBC or Fox Business News, whatever you prefer. And they got to get somebody there that they got to put somebody on the spot. You said it was the low. Well, we're close. Whatever. All right. Something about Japan intervention I read. I was reading some things this morning with the yen there. It was just whipping down and whip back up. That should get some attention and interest. Yeah, something going on there. So government getting scared. The euro is still below parity, and I don't see much stopping it unless this is part of a bottoming process, which leads to a whole lot of other things. But it's too early to tell. Pivot, slowing momentum. It's in this area here. So if the dollar should begin to pull back, which it might, there's a little bit of a retracement going on here. If this is a breakout failure, maybe there's some kind of correction in the dollar because now, hey, the Fed isn't going to do anything. Everything's kind of baked in for the time being. Maybe the dollar pulls in a little bit. Maybe, the 3-month here, kind of pulling back maybe a little bit, and so on. 5-year, that's right up near the highs there, and the 10-year. But maybe there's some kind of tradable bounce that happens in gold if the dollar begins to pull back, but it's certainly not an attractive pattern. If you're an intraday trader in gold, maybe that's something to lean your bias toward. And I still don't know what's going on with silver, that it looks like it wants to go higher, and it's in some resistance there, but it's not moving in lockstep with gold anymore. Hey, the momentum is slowing. It's in a downtrend. There's not much support here. So far, it's holding. It would like I said a week ago, I said, unless this thing can close back above 90, it looks like lower. Right. ZN is tanking. Yep, it is. That's the 10-year. That's the prices, the bond prices moving down, which means the 10-year yield is going up, which suggests, the markets should be dropping, right? So there's the relationship. And, we're not going to find anything pretty anywhere. The transports look like death. They're already below the July low. So, but they weren't talking. That's not the market. All these people that said the July low is not going to get taken out. Well, I guess they were talking about the S&P. It's all, but academics. The dollar plunged because BOJ in the foreign exchange market to buy the yen for the first time. Yeah, that's, whatever the news was, I was showing, the yen was initially dropped and ripped right back up again. So maybe traders just want to get out of the way and let the dust settle. Bitcoin, does it hold? Doesn't it hold? I think generally, unless things get a little on the move here, one way or to the downside because of these bonds moving, it's probably going to be more of a consolidation day. Yeah, all yours, Dan.
Yeah, look at Alex's numbers there. That is full inversion. Wow.
You can see the numbers right here. The only one that isn't inverted is the 3-month. Well, you can see the 30, the 10, the 5, and yeah, the two is above there.
Well, so the scenario Greg laid out there, that's exactly what I want. I was fully bearish into the close. I was hoping we would get an insight, a 1, 2, 3 would be a gift or some type of bounce into 10 or 1030. Sell setup less than a third into yesterday's bar, and that would be the place to start. I'm putting on more shorts, call spreads, anything over yesterday's high. If it's a pattern like this with a void, look great. I gave a big list though of there's actually, I got more longs and shorts, believe it or not, on that list, but it's a list of they have to take out like here's an example, Schwab. And yesterday was our moving average analysis on MT Live, right? So I have a rising 50, flat 20. I'm in a trading range. Red bar, if it trades above yesterday's red bar, then it's a breakout of a trading range showing relative strength. So I have a lot of stocks that fit in that category, which I just posted on the list. And I have a number of shorts too. I posted one yesterday after the close. This little 1, 2, 3 looks good. And there's a lot of these type of patterns where you have failed retests. And now we have a 180 reversal and a bear 1, 2, 3, bearish weekly, and a price void. So that's the recipe for new shorts that I like at the converging 2050. So it's light volume, keep in mind, but that's a great setup. It's a closing breakdown. Disney's on my list. That's a closing breakdown. More of a call spread over over the green bars high. Today's Thursday, so over Tuesday's high, or no, Monday over the week's high. PII closing breakdown. That looks like it's headed to $100. Call spread idea also. Amazon's on my short watch list. Absolutely. Closing breakdown, bear gap here. Couldn't fill the gap. Closing breakdown, price void. That looks like that's headed to, the low 110s. I don't know. But yeah, call spread and 30-minute low. Start off with a day trade. 923 call spread. Well, you have 121 is way too tight. You would have to do it over yesterday's high. So that would be 124. And just typically we go $5 wide just to start. So that would be that. So go look that up, Chandra, and tell me what the premium is. Yep, F is a 1, 2, 3. And that's why I like the gap up. I mean, I wish we had a bigger gap up. As Debbie said, the 830 employment number started selling off pre-market again. But yeah, to get patterns like this that gap up and then trigger at 1030 are ideal. So this one's up a few pennies, 1013 is gapping up a dime. Ideally, you want them to bobble around for 30 minutes at least, and then make new lows. We did one earnings trade yesterday, DRI. We did the 110s way the heck down here. And I even made the comment, I said, you know what? And this was total speculation. I said, as long as it stays above the 50 MA, I still think we're going to open up profitable. Now it's clawing its way back up a little bit to 130. Actually, let me tell them to bid 10 cents to get out. That's what I'm doing. 1 second here. All right. This was the only new trade I gave yesterday. We were purposely very, very calm. There's some news in the brokerage sector. The SEC supposedly is maybe going to keep allowing. Yeah, let's look at those and keep allowing payment for order flow. So that's what was helping Schwab there. And yeah, so here are my earning stocks. Len. So Len's up a few pennies. No, but it's a sell setup. So the fact that it's up a few pennies is good. That's a sell setup at the declining 20. So that's actually a short under yesterday's low, but I would wait 30 minutes just because, you know, let some of any earnings news kind of wash out a little bit. TCOM up, but no pattern. KBH down. 20, that's a 30-minute low. Target gap fill. Yeah, I'll look at those in a second. Full. It shows a gap in the 61, but I don't see any prints. This is gapping up. 912. It's a Climo, but still a dog. FDS topping pattern. That's a call spread. Yeah, Hood and Schwab. Yeah, Hood's gapping over yesterday's high. That's bullish. GME. Yeah, short yesterday's low. Sure. Yeah, it's kind of a 1, 2, 3. There's our DRI. Manu was up. Wow, look at that. That went up to 1440 and now it's down. So that's garbage. Oh, that's the Manchester. That's the soccer team. Look at this nice 1, 2, 3 lived over here. Wow. All right. Why am I looking at? Yeah, TMOS. There's a call spread candidate. That looks fantastic. Do something over the 50 MA. Looks fantastic. I'll look right now. Disney was a call spread candidate. So the 120 MA 142. I'm going to go right to next week because there's not going to be anything at 142. 42 by 72, so it's too spready right now. ACN, it wasn't, I don't think, actual earnings, but they made some kind of something or other, but no pattern. All right, Vert here's another one. Profits off of Virtue Financial. A ton of their money is on market making, order flow stuff. So let's keep an eye on that one as a gap trade. It's right at resistance, so it's not ideal, but it would be a put spread idea. There's no weeklies, but the 21s for 0 by 75. Can't believe these frigging jerks. Just that's just insulting. So I'm going to try to play market maker, selling for 70 cents, going out of the money. GME. Yesterday's low, I mentioned, Thomas. Schwab. Schwab has to get over yesterday's high, or I have no interest. Hood. Let's you know, I think it's a longer term bottoming pattern. So it is on my core long watch list. I'm gonna put this in the window. And maybe we sell some 950 puts on it today. CHRW, we're short the puts on that. One of them stopped out break even yesterday. I think it was this one, Scott. Let me look. Well, I take that back. It was break even. CHRW. Yeah, that one stopped out break even yesterday, Scott. I closed it out on the spreadsheet. But we're still in XPO. This one, the stop is under these prior lows. We just shorted puts on those when FedEx had their crazy profit warning. FedEx is after the bell. It's Thursday after the bell, I think. DCTR alarm. That's just light volume. Let's wait for a 5-minute low on this. That could have been just a little spike. 2602. I don't want to get short on a little spike right there. Actually, let's do it under 26. Make it prove itself. HS on YouTube had a question about what's going on with airline stocks like LUV. Well, the airlines are getting hit. Yeah, when LUV, we did mention yesterday that it's weaker than the sector. It took out the prior. Look at the weekly, monthly. I mean, what's going on with it is fundamentally less business. And then you got which ones are weaker than the others. See, Jets is holding, the sector is holding its prior low, so LUV is weaker.